Good afternoon. My challenge here is to keep everybody awake after the delicious lunch. And it wouldn't be a bad idea, a very cold coconut water for us to drink now. Well, thanks. First of all, I'd like to thank you, this association, the exports for steel products here, and also the consulate, the Turkish consulate in Houston for the invitation. It's a pleasure for me to be here to discuss about banking service. I notice here that one of the main difficulties for foreign companies entering in the U.S. is the banking or the financing side of this. But my agenda today is going to be discussing so why to invest in the U.S., why to invest in Texas, and the main challenges that we identified banking for foreign companies. I'm in charge of the international division of BBVA Compass, which is a mix of, we call ourselves Glocal Bank. Why Glocal? It's because it's a global bank, it's a bank headquartered in Spain, but with a strong presence in the United States through Compass Bank. And here in Turkey, BBVA controls Guarantee Bank, which is also an important bank here in the country. So with that being said, why invest in the US? Well, when we're looking for international expansions, every company has its own expectations or goals. Some of them is to get better margins. Some of them is to, because the competition is going abroad. Some of the companies also, they want to produce at lower costs. And we've been noticing a lot of European companies going to the United States in the last 6 years because of the European crisis. So they saw that as an opportunity to diversify the markets. And we heard here, what is better is to export, to establish joint ventures, to produce abroad. It depends. It really depends on each stage that every company is to decide, because establishing a production abroad implies in more risks. However, if you decide to do so, you will not be alone in doing foreign direct investments. In 2013, which is the consolidated numbers that we have for foreign direct investments in the world, $1.4 trillion in foreign investments were invested in the world. And almost half of that were consolidated in only 5 countries. 14, the level of foreign direct investments declined a little bit, but for 2015, the level of investments went back to $1.4 trillion. Out of this, about $800 billion were invested in the United States in the period between 2010 and 2013. It's a very impressive number. And we hope that the Turkish company starts getting a bigger piece of this pie. And when we talk about foreign direct investments, immediately we're also discuss about trade flows. The United States today represents 20% of the global trade flow, out of almost $19 trillion of products that exchange hands in the world. And Texas alone represents more than 500 billion. So it's a tremendous opportunity for all companies, and you see how Turkey compares also in this flow. Main partners of the United States, when you see almost 67% or 2/3 of the entire flow of the US is concentrated in 10 countries alone. So Turkey, from this information that here, was number 27 in exports destination of US products, and number 33 for imports from Turkish products. So we see the room that Turkey has to improve, and this is, I'm sure that this will be happening soon, mainly with all these initiatives with the Turkish government on this. So we're talking about growth in the United States. Our economic department has revised the projections of growth, the GDP growth. And It's weaker than everybody expected, but I would like to just bring in a subject here for you to think about. Yesterday night, I called my daughter using WhatsApp. How much did I pay for that? Zero. How much you pay to use Facebook? How much do you pay to use Instagram or Twitter? So the social media, this is intangible. Nobody pays for that. This does not impact the GDP. But that means that people are not working, time is not being consumed. So I still think that the GDP measurements, the way that they are doing today, will be changed. And this reflects the economies of each country that is heavily involved with technology. When you look at the interest rates in the United States, we also see that rates are still at historical low levels. And this is an opportunity to invest. And we're going to be talking a little bit more about interest rate of loans towards the end of this presentation. Why Texas? I mean, a lot of people already discussed it. It was a great presentation. I'll not be covering too much about this, but this gives an idea of the comparisons between Turkey, Texas, and the United States. Obviously, Texas is one of the main hubs and important states in the country, and if you're considering investments, I think Texas it will be an option. And from what I see, some European companies, they see Texas not only as a hub to invest in the United States because it's the central location, but also as a hub to explore Latin America. So it's a natural port for the imports and exports to and from South America. This is a scenario I'll briefly discuss about oil price, and obviously oil and energy represents an important part of economy, and based on the oil price, this would determine the growth of the state. And our economic department did an analysis that if the oil price went down to the $20 level, the impact of the Texas GDP would be actually a minus 0.5% of growth. Why is that? Because now the economy is much more resilient. It's much less dependent on energy than it used to be in the past. In the past years, 1/4 of the GDP growth of the United States was led by Texas. About 33% of 1/3 of the new business generation was also produced in Texas. And this is not only in the energy, but in the healthcare, and the high tech, and finance, and other major sectors. I will skip this. What are the main challenges that facing foreign companies? Well, we discussed here about a lot of companies, they may be very well known back home, but nobody knows them when they go to the United States. There is language barriers, there is cultural difference, there is the way that banking works, and lack of credit history. I was not born in the United States. I moved to the United States for work. And when I got in the United States, I applied for a credit card. And the credit card I received a letter 2 weeks later that the credit card was declined because it didn't have credit history. It's okay, but the bank that declined that application was the bank that brought me to the United States to work for them. So, and I said, well, that's a very difficult situation if I couldn't get the credit card. And this is a reality that really happens. So what happens to most of the companies here? They have several questions when they try to go internationally. How can I protect my sales if I'm selling a different currency? How can I finance my operations? Language barriers. I'm sure that at least whoever is considering expansion abroad faced one of those questions. So one of the questions that I'm often being asked, how can I choose the right financial partner? I think I have good news and bad news for you. The good news is that the United States alone have 5,300 commercial banks. Only the state of Texas has more than 500 banks. that's the bad news, because then how can I choose so many banks? So you see the trend, the number of the banks, and you think that in the early 80s, more than 14,000 banks were in the market. And you see the consolidation trend, but it's still 6,000 institutions is too much. Number of branches increase with the time, but we expect a further reduction of branches because the United States is finally investing heavily in the technology. It's interesting because the banking industry in the United States wasn't as sophisticated. They didn't invest much in technology as they are investing in the past 5 years or so. So everybody today has their bank in their hands through the mobile phone. And the system, the financial system in the United States is so easy to understand. You can see all the regulatory entities that are controlling the banking sector. So it's very complicated to navigate through all this web. Main financial products and service. So when a company goes to a different country, they are looking for two types of financial products. One is the cash management piece of that. Is how do I collect my receivables? How do I pay my suppliers? How can I have access to cash? And the financing part of that. We're going to be discussing a little bit more about the financing parts, because there are, depending on what you need to do with the money, is the right product that you will be looking for this. So the 5 types of products that I normally see foreign companies seeking in the United States are to finance working capital, to finance their long-term investments, to finance their trade finance, and to do factoring business or leasing. So on the working capital, the way that works in the United States, you need to have accounts receivables and inventory. Normally, the loans are structured based on an advance on the receivables that you have. So it's very difficult for companies that are starting up, that they don't have the receivables base yet and the inventory base yet to finance if they don't have that. Typically, those transactions are for 1 year. On the term loan are the usual long-term financing when you need to buy land, to make a construction, to buy equipment. In terms in the US, they varies from 5 years to 7 to 8 years for those equipment. On other finances, the trade finance side, and are the usual needs for letters of credit and for supply chain financing. In the United States, when you are establishing your operations to be exported, we can take advantage of Exim Bank, that is the Export-Import Bank of the United States, that provide guarantees for companies to export, as long as at least 51% of the product has US content. And this is an alternative that allows the banks to reduce the risk and therefore to charge less for the loans. On the factoring or forfeiting are the structures in which the banks will be buying the receivables that you have in your books. So you are selling to other companies in the US, or you're selling to Latin American clients. The banks would step in and buy that risk for you, and therefore providing financing to the company. So when we're analyzing the risk or the credit to allow some limits, things that we most pay attention, and these are things that differentiate a lot, because in the United States, there is no such a thing called name lending. I've been banking for many years with Latin America mainly, and they say, well, this company is X, they are so strong, so you grant some credit for them based on the name of the entity. In the United States, it doesn't happen that way. Number one, because they don't know while the foreign companies. And number two, the regulators don't allow banks to do this type of financing. So one thing that is important, and we discuss it here, is that you are well prepared when you approach a bank. Because remember, the first impression that you transmit to a banker, and bankers are traditionally more conservative than the rest of the humankind. So it's really bringing a very solid business plan. Where do you want to go? What's the money that you're putting on the table? What is the investment that you need, and in how many years you plan to recover that investment? So this is very important, to be very transparent with the bank. So who is your parent? Normally we require 3 years of financials from the group or the parent company. And to expedite the process, would be great if you have those financials in English already, because then this expedite the time to avoid us to have to hire a translator for that. If you have contracts, long-term contracts with your clients, that would be important to share. And if there is one thing that we really give a lot of value to the company that approach us is the transparency. We discussed this morning about the rule of law, the easy of doing business in the U.S., but also the compliance costs of all this. And transparency is a key for any company that is approaching that market. So those are really factors that we analyze. Types of guarantee and support. The easiest way is to leverage the banking relationship that you have in your home country. In this case, the case of Turkey, if you have access to the Turkish banks and they would be provided to issue a standby letter of credit, this will facilitate enormously. Because remember, when you go to a different country, they don't know your company, they don't know your operations. So having a standby LC, at least to support you in the first year of operations, this will expedite a lot the process. So the second route, if the standby LC is not available for any reason, many banks, they would accept a parent guarantee. But I would say that only international banks would do so. Although the United States have more than 5,000 banks, and since we discussed that every state in the United States looks like a country, the banks in the United States are not too international. It's different than European banks. So until 25 years ago, a bank that was present in one state was not allowed to have branches in different states. So now this law has changed. They are more expanding to different states, but it's true, there are very few banks that have the appetite to do international business. So this is very important to notice. There is a little bit noisy slide here, but this gives the information about this environment of interest rate. And the first slide on the left side, you see the evolution of the LIBOR. LIBOR is the main base for international loans in the United States. And you see, obviously, they are going up since the beginning of this year. However, they're still in very low levels. But when you compare, and I put a comparison chart that is the LIBOR versus zero, obviously, when you see that in Europe, you have negative rates nowadays, it seems much more appealing to borrow money here in the US. But I would just call your attention to the trend of a euro and dollar variation, because if you are borrowing the money in euros and all your revenues are in dollars, if the euro is strengthened, gets stronger along the time, you're going to have some trouble and pay back your loan if your revenues are tied in dollars. So please pay attention on that regard. So very quickly, because they showed me that I have 2 minutes to to explain to you how to get several millions of dollars in the United States. How to decide when you have so many players in this market. Leverage the banking relationship you have in Turkey. This is important. But make sure that the bank that you're using in the United States are banks that understand international business and would take the risk of a Turkish bank. One of the mistakes that I saw some of the companies have in the United States, they arrive in the country or in the state and they start banking with a local bank, one of those 5,300 banks. And when they need the credit, that bank was happy when they are getting your money. But when you ask money for them, they say, oh, I don't have the capabilities for that. So do your research, see if that bank has those type of capabilities and banks that have an experience. Do not forget your expatriates, your Turkish employees that's going there. They don't have credit history, as I didn't have when I got there. So there are specific banks that they would offer car financing, mortgage. They will provide credit cards to our foreign employees. So if you bank with them on the commercial side, they would help you on the personal side of your employees. And very quickly to give an overview about BBVA, as I mentioned to you, we are a global corporation present in 32 different countries. In the United States, the name of our bank is BBVA Compass, and here in Turkey, it's Guarantee Bank. And BBVA Compass is the bank in the United States that we are in the southern part of the United States. There is a very natural synergy with Latin America, and we're headquartered in Texas. I do have more information, but I think my time is up, and that's pretty much one last thing that I would like to show you, that if you, after you've seen all this good news about Houston, we hope that you can visit us in Houston to consider your investments there, and know that BBVA Compass is a partner of the NBA, and also we have our soccer stadium, it's a football stadium, and in Houston called BBVA Compass as well. In conclusion, markets are different. Where are you going is different where are you coming from. This is a very basic statement, but sometimes people don't pay enough attention to that. The way that you do business where you're going is different than the way that you're doing business where you're coming from. Location, take into consideration infrastructure, logistics, tax regulations, legal system, proper advice. If we were to give you the most important factors is be surrounded by good people, good accountants, good attorneys, and good bankers. This will pay off in the future. And financial support, try to find the right partner for this. With that said, thank you so much.